This is our Forex blog for May 19th, 2011. And like most days, we really want to buy the strong pairs versus the weak. The dollar was strong most of the day today. The daily, weekly, and monthly trend were up. The yen was weak. The euro had bits of pieces of strength and weakness. The weekly trend's up, monthly trend's down. The pound, while the daily, weekly, monthly trend is down, exhibited mostly strength, in the European and U.S. session. The CAD, even though the weekly, monthly trend were down, had strength today. So, putting it another way, today was a tougher than normal day to trade because the real-time trends oftentimes didn't match the longer-term trends. So when that's the case, when you have a currency where the weekly trend's down, the monthly trend's up, and the daily trend's down, you got to use, the daily trend. The dollar was an easy one because the time frame trends were up in all cases. The Swiss, which has a very strong weekly and monthly trend, was extremely weak today. So those are always harder days to trade. The euro had a lot of strength coming into 6, pretty much to 12, and because the yen was the weaker of the two, the euro yen was definitely a good one to be looking for sells in. Let's take a look at, or I'm sorry, look for buys in. You want to buy the strong euro versus the weak yen. So looking at this chart, the first thing you notice is prices above the hourly, so that's one of our rules for buys. When it had this pullback here to the hourly, normally that's a decent place to buy, but the market was pretty weak, so I wouldn't have taken that trade myself. Plus, you never want to take any trades that have or don't have a profit target of 1.5 to 2 times bigger than your loss. If you're going to risk 10 pips on this, let's say when it breaks out of this bar's high right here at 34, you have 42 as a potential profit target, in resistance where there's going to be some selling, 50 in the Fibonacci retracement level, which was the high all night before the U.S. Before the new day broke Eastern time. Now the second pullback down had a little bit of weakness, and then it all but disappeared. That's a much safer, higher probability trade, and it had many opportunities, 1 opportunity, 2 opportunity, 3 opportunities to go down and to break the hourly, and it never really did. Plus it's above the previous day's high. That's very bullish. This resistance area had had a lot of selling at it, here, 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 here. So it should have pulled back more than this, and it didn't. So, this is a pretty decent place to buy. You don't know if it's going to take off, but once you're in that trade, you see real-time strength coming in. It went up to our upper containment band, which is usually an area where it's going to stall. We have a weekly pivot level here, and my Fibonacci profit target, which is most likely to be the high of the day, which later in the day, tends to be. So you have a counter trend sell signal right here, and notice the next bar it loses some momentum, So you want to get out of your trade there. And if you're a really aggressive trader, or if the weekly trend was down, in this case the weekly trend's up, the middle one on the bottom is up, but if the weekly trend was down, you might have wanted to take a little counter trend trade there and ride it down. Notice there's a little bit of weakness, no strength, a little bit of weakness, a lot of weakness, a little bit, no strength, a lot of weakness, So when it pulled back to this fib area, anytime an area acts as resistance like this, resistance, selling, 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 when market breaks above it, it tends to become a support area on the way down. That's just the case for all areas, and especially fib areas. So that's a good place to get out of that trade if you did do a counter trend trade there, or to look for buys again once the weakness subsides. But it was pretty weak, so I don't think I would have really taken a buy here myself, and I would have missed this little bit of a move here. And it went up with 1 bar of strength and then almost nothing, and it went sideways. The trend's obviously up. When it broke out of this 40-minute sideways range, it's a good place to get in. And ahead of time that this, up here around 17 to 18 is your profit target, but it's, 25 pips away. So you're going to risk 7 or 8 pips with a good chance of making 25. And in this case, the trade worked, and this is the likely high of the day because it's a Fibonacci profit target. The monthly trend is down. You might want to give this a counter trend trade right here. Don't ever short after a strong bar like this. But the next bar, it wasn't extremely strong. So you can have a very tight stop because that bar is very tiny. You go short when it breaks the low. You put your stop above the high. And then you wait and see, once the market's coming down, what's going to happen. And initially it sells off a little bit of weakness, not much. And kind of just kind of gradually comes down, and there's really not that much weakness except for that one bar here. So you might have got out of your trade somewhere up here at around 81 or so. You're never going to catch every pip, but that's 25 pip move there. And notice, well, that's it for that trade. The euro was strong today, the yen was weak. It sold off. It had this is kind of an Elliott two-wave pullback, but it doesn't meet my personal criteria for getting into it. You can see it came down to the 1.618 fib level. If you want to, anytime you see a big move followed by a little bit of retracement, big move again, and it kind of runs out of steam at the fib targets where the weakness is kind of subsiding like that. Not a bad counter trend move right here. You could have picked up a quick 20 pips doing a counter trend trade. The pound was quite strong today, but so was the dollar. So you don't want to trade two strong pairs. If you do, you're going to tend to get yourself into some choppy action here. You can see it went up, pull back, went up, pull back, went up, kind of came down. You would think the trend would continue because it was mostly up, but no, it comes right back down. The daily, weekly, and monthly trend of this thing is down. So if you wanted to sell up near the highs or a Fibonacci profit target of this first wave right here, that makes sense. It kind of came right up to that level. There's two resistance areas right there. You never want to sell right at an extremely high trend bar, but this bar right here had a little bit of weakness. Breaks down underneath there, you go short. You didn't make much on that trade, 96 to 82, but you could have easily made 5 or 10 pips as this went sideways. That's about it. One trade that I took in the live room was the 50% retracement back up to here. I got short around 75. I was planning to add to it at 86. Never quite hit that level. But you can see it had a lot of weakness on the way down and less strength on the way up. And, kind of ran out of steam on that bar and then it fell. If you're a scalper looking for 5, 10, 15 pip moves, you can use these tools, to find a lot of opportunities. Again, the Swiss extremely weak today. However, the monthly and weekly trend is up. The dollar was strong, so obviously you could have found a lot of buys in the dollar Swiss. Let's look at some of the patterns that really make sense. When you have a nice size up move like this with just a ton of strength, and then a little bit of a pullback or a sideways range with less strength than you had weakness, and especially right towards the end, almost no weakness, this is a very high probability trade. Now the only downside of that trade is the 10-day moving average is just right here. It's pretty close. It's around 23. So you're going to risk 10 pips to maybe make 10 or 12 pips in this case. So you may decide not to take the trade based on that, but pattern-wise, when you have a big move up with almost no weakness on the pullback or sideways range, it's just a high probability trade. Now also, this currency has a daily trend that's up, but the weekly and monthly trend is down. Usually you can get short at and above the upper containment bands, especially when it's at our trading zones. If you draw your fibs on the first move up, you can see it pretty much touched the 1.618 fib target here. Now if you want to sell at an area like that, don't short when it's extremely strong. Wait for some of the strength to kind of fall off, like right here. So at that point and beyond, I might have been looking, to sell. So let's say you went short right here. Obviously you got stopped out with a small loss. And then it went up again, and then this bar here has some weakness. You get short again right here, about the same price, and you can see it pretty much just drifts down right to the hourly moving average, where a counter trend buy signal pretty much, and the lack of weakness on this bar pretty much tells you it's likely to be over. So you might have lost 7 pips. You go short again here at, let's say at 60. We'll round down. You're out here at 25 for a 35 pip win. You lose 7 or 8 pips, you make 30, 35. And that's really the only secret to trading. These tools measure the statistical strength or weakness of all the dollar pairs and all the Swiss pairs on a bar-by-bar basis. And once you're in a trade, if you bought this little pullback right here, which it's up too much for me to buy it, and the weekly and monthly trend's down, but the pattern looks good. A lot of strength on the way up, a little bit of a pullback with almost no weakness, and the few green bars are stronger than the red bars. You go long again, and notice on this first bar right here, it takes off with tremendous strength, which tells you there's a pretty good chance the next bar is going to go up, and it does, and it has a little bit of momentum slowing down. It's above our upper containment band. Let's say you got out in halfway of that bar here at 61. you're in around 48 to 50 out of 61. You still made 10 pips within 5 or 10 minutes, on a pretty high probability pattern. Up move with tremendous strength, pullback, and preferably pullback in a little bit of a sideways move. Notice also that I forgot to mention previous day's highs right here. Resistance area, once broken, becomes support. Again, it works a very high percentage of the time like that.